Hi, folks, and welcome to Money and Politics for March the 3rd, 2021. Good to have you joining me. And we're going to be talking about a number of things today. Of course, the big story for a lot of people is always Humbl and forwardly. And it was a down day on the market, as you know, not just for TSMP and for forwardly, but just in general, the market was down. I wanted to bring up a couple of things. Let's quickly take a look. And if we look at the top of the screen, we're going to see the little hard to read, but the S&P 500 was down 1.3%. The Dow was down less, about 0.4%. The NASDAQ took a big beating. That was down 2.7%. And I'm going to come back to this stock here. One thing people are asking me, and before I do that, let's bring up where we'd like to look. This is Humbl, and Humbl we stopped, the last trade was at $3.91. So if you divide that by 4, that is equivalent of being under $1 this time last week. Obviously, it came down a lot. And you can see this is the year-to-date chart, and it kind of looks like the edge of a saw going up and down and up and down and up and down. Now this, folks, is what we call, well, a lot of movement. This is the kind of thing that a lot of stockbrokers try to talk people out of being in stocks like this because they think that the volatility, that was the word I was looking for. This is what we call volatility. Now, a lot of stockbrokers, a lot of financial advisors will say, you don't want to be in that stock, it's too volatile. I will tell you, in my opinion, you do want to be in a volatile stock. Well, why would that be? For a couple of reasons. One, when you see this up and down, that gives you buying opportunities. Now, the frustrating part is when it goes up, you know, and you're up there at this peak and it hit $6.84. Yeah, if you knew, well, then you would have sold then and bought low, but you don't know. So you just got to accept the volatility if you're going to be in this kind of a stock. And the other thing I would say is let's remember that the market action of this week is going to be unusual for obvious reasons. Why? Well, it was just last Friday we opened up on that reverse split. Then we had a number of people who are in Humbl couldn't access their account for days. So this is just a screwy kind of a pattern. I would hope you would kind of agree with me on that. Not that I need you to agree with me, but I'm just trying to put this into context. We've had some people, even today, and it's almost a week since the reverse split, getting into their stock for the first time. So some are selling. You know, the other thing is that I noted that the NASDAQ took a deep dive and that it was down 2.7%. When that happens, there are a number of people who buy on margin. And that means that they only, they're borrowing from their brokers, if you don't know. They have like, let's say they had a portfolio that was $100,000. $50,000 of that might be the stocks they actually paid for, and then they're buying another $50,000 worth on credit from places like Schwab or wherever. If their stocks go down, let's say they had a lot of tech stocks, if their stocks go down, they have to maintain 50% own equity. 50% equity. So when their stocks go down in value, all of a sudden they don't have 50% equity and they got to come up with more money. They might have to come up with, you know, 5,000, 10,000, 8,000, whatever. They have a margin call. And so it's also possible, I'm not trying to make excuses here, but I am trying to explain more than just the day-to-day price of a stock. I want you to understand what's going on mechanically. In certain circumstances like this, it could be that when the stock dropped, some people, some of the owners of Humbl, had to go in and sell their shares to meet a margin call. How many of that there is, I don't know. So I would just say, as I've said in the past, when you look at stocks, I'm reporting on it, so I'm somewhat to blame because I'm giving you an update every day. But it's really not good to look at it every day. There's a saying in cooking that a watched pot never boils. And that's kind of what we're doing. We're looking at it every day and saying, come on, come on, come on. And it's like, it's unfair to the people running the company. As I mentioned the other day, we need to evaluate these companies over a longer period of time. I would say 6 months. At least think of it in terms of months. I think what matters is if we look at this January, this past January, Humbl came out of their merger in December, and so they really just started getting their act together corporately in January. So let's compare what the price in June is to where the price was in January. And I suspect you're going to be pretty happy with that. I, by the way, bought some more shares today at about $4. So as I said in a tweet that you may have seen, the future is on sale today. And I think that's where we are. Now, that said, some people have asked me about, well, what about forwardly? Here's what I would say. Coming up on Friday, George Sharp, who's the CEO of Forwardly, is going to be having his investor call. And you see there, March 5 at 4:30 p.m. Eastern Standard Time. So 3:30, a half an hour after the market closes this Friday. He's going to have his investor call. And it's hard to read there, but it says details will be sent to registered email addresses only. So I think you have to register your email with Forwardly, and they'll mail you out the details of the call. I don't have those at this time other than to give you that. Here you go. Down here it says you can register right underneath there. And, of course, that's at their website. Just Google Forwardly. So that's that. Better than me speculating. This is Wednesday. In 2 days, you're going to have George Sharp going over what's happening with Forwardly. And I'll be recording that, and we'll be replaying some of that as I did last Friday with Humbl. Okay. We've had, as I just said, some interesting movements. I mentioned yesterday also that I like DIG. One of the people said that they were going to be buying DIG that wrote in. Let's take a look at DIG real quick. This is, again, an ETF on oil and gas. It's a 2-time leverage, which means it's going to go up 2 times faster than, let's say, some of the oil and gas companies. In any event, I was advising a friend to buy this back when it was $63, and now, as you can see, it is basically a double. Let's see if I can move this over so I can show you more of that chart. So there's the price action. Let's go to 6 months. I had her buy it back in November, and since she bought it in November, a friend of mine, at 63, it's gone up, and you can see it is at 122.23. So that's one. Another one I wanted to show you, and a stock that is one of my favorites and we haven't talked about, is INMD. And I'm sorry I haven't brought this up before. Let me bring that up. INMD, InMode. InMode was a company, it's a Jewish company, Israeli company, I should say. It came out as a IPO in August of 2019. I'm going from memory. And by the time it got to December, it was up 300%. Do people care about their looks? I think that's obvious. Do women care about their looks? I think that's obvious. Let me say that InMode, if you go down and read their profile, some of it is hard to understand, but it says it develops and designs and manufactures non-invasive medical aesthetic products that target an array of procedures, including permanent hair reduction, facial skin rejuvenation, wrinkle reduction, cellulite treatment, skin appearances, and other things. This is a company I think can grow for quite some time. Let's take a 1-year look and look at that chart. And I'm going to contrast that. Let me bring back in the chart here on Humbl, and this is year to date, so since January. And let me bring in and compare how the price action was on INMD. Now, as a reminder, folks, when you look at the Humbl chart by itself, it just gives the price. But when I compare, and you can see up in the upper left, we're doing a comparison. When you compare INMD or anything, it's going, you can pick a color. I'm going to do red here so we can see this. It's going to compare the growth of the money over a period of time, okay? So what you see is that since the beginning of the year, where InMode looks like it's just flat, hasn't gone anywhere, it's actually up 59%. 59% in just 3 months. It's incredible. This is a great company. It's certainly not a penny stock, now $75. And we can see that here it was just $49 back on January 7. Now, the point I'm making here is twofold. One, I want you to look at InMode, INMD, and that's the red line. And I recommend buying that and having that as a long-term hold. Number two, for all of you people who are complaining about Humbl and the volatility, well, it was up to $6 and now it's down below $4. I get it. I get it. It's not easy to watch your profits evaporate like that. But as compared to the great company InMode that I'm telling you to buy, that's up 59% this year, Humbl is up 531%. And that's after the downturn. And earlier, if you look, and what this was our high water mark here, I think, at least since the split, it was up 1,000% on March, I can't read, whatever. I think it was I think that was Monday. So if you want to have big movers, you're going to have to put up with the volatility. And so you're seeing that with Humbl. Now, also, let me show you, again, a different chart of InMode. Now, this is 1 year. But this is a growth chart, folks, that is sustainable. Now, when you see, as I said, the volatility, we go up and down, up and down, up and down of the chart here on Humbl. What happens is that, unfortunately, shakes a lot of people out of the market. They can't stand the volatility. I would just say, look, it's an exciting roller coaster ride. Go along for the ride. Don't be afraid of it, okay? Think in terms of 6 months. Then think in terms not of June, but of December. If this goes from where it is today, which is, let's call it $4, it's $3.90-something, 1 cent, I think. If this goes to $6, are you going to be upset? If this goes to $10 at the end of the year, are you going to be upset? No. So just hang on, okay? As I said, look in terms of having your stock grow over a period of first 6 months. And again, I'm guilty of making you people maybe think about it. Those of you who can't stand the volatility, I know a lot of you are hanging on, and that's good. But the one thing I was going to bring up, this chart just look, I have said before, remember I said that you can't sustain growth when your stock goes up like an F-16. What you want is your price action to go up like an airplane, gradually climbing time over time. And here's a 1-year chart. And you go back 1 year ago, and this was right around St. Patrick's Day, March 16th, and the price was $17. It's up almost $60 since then. And look how it went up. Not like a sawtooth. You had a little bit of a dip here. The whole market went down at that point. But what I really want you to take away from this is you got this nice, steady, gradual, as compared to some of the price action we had with Humbl, where it just shoots up, as it did here, just shot up, wow, and then falls back down. And I said at the time that almost every time you see something going vertical, it's going to come back down, because it's not sustainable when you get too much price action in too short of a time. Okay, when you get too much upside in too short of a time, you're almost always going to get a pullback. And so these are simple concepts. I'm kind of belaboring them. I've told you before, my younger brother has that saying, belabor the obvious. It's obvious when someone tells you. It's not always obvious if you don't get the word. So that said, I think we're covering some good points here. Let me just look at my notes. I wanted to bring up the in-mode, and I did that. The one last thing I wanted to say, I had to go to talk to a banker today, and this is not to embarrass anyone. I'm not mentioning names, but I started talking about Humbl and how I'm doing these videos. And folks, I want you to appreciate, and this is not about me, but the reason I do this, and maybe I'll do a longer thing, but when I was 20 years old, my father died, and I was in college. And just at the time that I wanted him to start teaching me how to invest, he died. I finished college. I took over the family printing business 4 years after he died. It was almost bankrupt. I just struggled mightily. And I didn't know the first thing about anything. And I didn't have a mentor. And that's what motivates me to want to be your mentor. So I can tell you things in minutes that took me sometimes months, maybe a year to figure out, or to learn lessons where I did something stupid and lost $5,000 or $10,000 along the way. It's not that I'm so smart, it's that I've made so many mistakes. And what I'm trying to tell you is this. I sometimes say, imagine if we went over to France and we said, hey, you Frenchmen, you want to play football? We got this team here called the Oakland Raiders, and they're gonna play you. And the French guys say, well, okay, what's the rules? What are the rules to the game? And we go, don't worry about the rules. You'll figure it out as you go along. Well, who's going to win the game? You know who's going to win the game. And they're going to be the Frenchmen. I bring this up because you guys get out of high school. Everyone gets out of high school or college, and they go to start to play the money game. And no one has ever told them the rules. And it's so easy to get taken advantage of and to get screwed over and have bad advice, and you don't recognize bad advice. Or you victimize yourself because, like on a stock like Humbl, that I think would go up dramatically over years, you know, the tree starts shaking and the price goes down, and you let go and fall out of the tree, and you sell all your shares and you move on. But look at this stock, folks. Yeah, it went down some, but it's up 531% since the beginning of the year. My goodness, that is how you get rich quick. I don't like to tell people that investing is a get rich quick thing, but if you can make 531% in 2 months and change, that's remarkable. Going back to the banker I was talking to, and I'm going to take a little time. You can always stop watching if you want. we concluded our business, and then I was telling her about these videos and what I'm doing. Now, she's a middle-aged woman, nice woman, obviously educated, is a bank manager. She knew nothing about the stuff we're talking about. I mean, I don't mean Humbl. I mean, she didn't basically know what ETFs are. Didn't know about the S&P 500 or the NASDAQ, or that you can buy those. Or people who are otherwise highly educated, I've said this before, but I'll say it again, and this is another example. No one ever told them the rules of investing. And I am motivated here because I went through the pain of learning this, and I want to share the knowledge. And I hope you're getting value from this. I sometimes feel, I mean, I use the example as if I was a lifeguard and someone's drowning, do I sit there and talk about them drowning, or do I jump in and save them? The advice that I hope to be sharing with you on an ongoing basis, depending upon your age, but if you're in your 20s especially, I mean, over the next decade, or for that matter, if you're in your 50s, could be worth easily $50,000. I was going to say $100,000. If you learned how to invest, you can make a substantial amount of money. I'm not saying you're going to be rich, because on one hand, that's such a relative term. But you certainly can be better off than if you otherwise weren't investing, or if you were investing but in the wrong way. If you're putting too much money in mutual funds that, frankly, I am not a fan of, and I ought to do a story on that and why. Basically, they charge too much and they give too little performance, okay? So by learning the things that we're talking about, it means a lot to you, and I don't care if you dropped out of high school. If you have an income coming in, if you live below your means, if you start investing, you can really make a difference in your life and grow your wealth. And forget about college education. There's plenty of college-educated people that know nothing about the market. And what you're learning here, literally what you've learned already in the last month, if you were absorbing this, and just by investing even little dollars, you're going to learn lessons. You're going to be in the upper tier of the financially literate in the world, frankly. I was going to say in the United States, but in the world. Because did you ever have a class on any of this? No. And so if you want to get ahead, don't think about keeping up with the Joneses. The Joneses don't know what they're doing. Think about investing, and investing will leverage your wealth, as we see in these example. Talk about leveraging your wealth. $1 you would have invested at the beginning of the year in Humbl is now up 531%. That means, what, for every dollar you invested, you got $5.30. And down there in the corner, in mode, one of my favorite stocks, I ought to whip myself for not telling you about it a month ago, is up 59%. You know what the S&P was up last year? The whole year? 16%. And this is a year-to-date chart we're looking at. So I know I'm going long, but as I've said before, I didn't start the channel just to talk about Humbl. I think today is an example of where I can talk about Humbl and illustrate some of the lessons. So the takeaways are: invest, keep learning, evaluate the stocks over a longer period of time. Don't worry about the day-to-day fluctuations. That doesn't matter. Well, why did it go down today? Sometimes there's going to be a reason. There might be a reason that we care about. God forbid, if Brian Foote had a heart attack, okay, that would be a real reason we'd be concerned about. But the fact that it went down today, as I said off the top, we got a week of screwy action because of the reverse split last Friday. You got shares being locked up. People are just getting Some of them yesterday they got a hold of their shares. Others got it today. I heard one guy was writing in and saying his E-Trade account still didn't have his shares available for trading. I don't know if that's true. I'm going by what I read from the one viewer. So the bottom line is, let's all, if not get rich, let's all get wealthier. Okay, let's all get wealthier. Panic selling never makes you money. That's a good way to lose money. And I hope that you stay along for the ride. Give me your feedback. Yeah, I like the thumbs up. I like there's some good questions. And I'm noting, because I want to do some future stories based on some of the questions coming in, and that gives me some good topics. And one of those, I think I'd like to get an accountant on, where I do an interview with an accountant, and we'll go over some of the things about the difference between long-term capital gains versus short-term capital gains, and other topics. Anyway, I know I felt I guess I felt like talking today, but I was trying to cram a number of different things in here, and I hope it didn't come out to be scrambled eggs. Sometimes you got to watch these things more than once, and I just say that because, like anything, it's hard to absorb. So before I go, remember, on Forwardly, we're going to have the call on Friday at 3:30 Central Time, and I'll be covering that if you can't make it, but try to make it. Try to watch it yourself. All right. Thanks, everybody, for watching, and I will I'll see you soon. It's getting warmer, so we can look forward to that too. All right, take care, folks.